Hello, folks. Brandon Chapman with you today. It's another Theonite video for Monday. Oh boy, it's tax day. It's April 18th, 2022. I hope your taxes are in. Hope you save some money in this inflation environment. What does that mean? Today's rally. So the title of today's session: what does the last minute rally mean? Today's UOA tells the story. So it's one of those scenarios where you look at the market today. We were up. I guess we were up slightly. We were down. We were up again. We're down again. We're up again. So if you look at the futures, even extending after hours here, extending towards the highs. Of course, Don Kaufman's level here is his gravity point's 44.11, virtually stalling in the area of that point, and we're just kind of boxed in here. So what does it mean? We've had a decent sell-off in the market. We're coming down onto the 50% retracement of the swing from March 15th to about March 29th. Is this a point where buyers start to sell in? I think today's unusual option activity does tell a story that some may catch a bid here, others may not. Certainly we're oversold. We should look for some sort of movement, maybe even breaking out of this kind of channel that we formed here, very tight channel that we formed on the way down. Maybe catching a little bit of a bid, maybe back to 4,500, maybe even back to the prior high. But it's not like every stock's going to participate in this, as indicated by the unusual option activity today. So when we look at the sectors that are performing best, energy tops the list, followed by financials, technology, cyclicals, materials, and the S&Ps in there as well, right? So you can kind of see the areas that outperformed today with healthcare, staples, and utilities bringing up the tailpipe. And this does make sense a little bit with maybe the exception of technology, other than the fact it's rarely oversold. Look at the 10-year yield over the last two trading sessions. We're approaching 3%. Now, if you look at the expectations for the Fed funds rate going into next year, it's around the 3% range. But it's getting kind of ridiculous here. And this is very, very significant and structural. Look at the interest rates for the 5-year Treasury, for example. We're almost 2.8%. So while the yield curve's not inverted with a 5 and 30, or like, for example, a 10-year is at 28.62, we're not fully inverted, but we're really, really close. We're talking about a flat yield curve. The only thing is we look at the 3-month T-bill, IRX, it's got some catching up to do, and in catching up, it will. Fed's expected to raise rates by 50 basis points in May, in June, July. For how long is this going to go on? How long can they do it before eventually we start to see some real wear on the market in a very significant way? If you look at the Fed's balance sheet, a lot of people called this out over the weekend. Fed actually increased their balance sheet last week, despite the fact they're raising rates, supposedly ending their bond purchases, and in the process of doing quantitative tightening in May. How do they increase their balance sheet? It seems like, at least at this stage, are they taking the inflation problem seriously? And when you talk about inflation as an example, just take a look at Forward/NG. We're at crazy levels up here near $8. Of course, if you've been in my sessions on a day-to-day basis, we've talked about a trade, unusual option activity trade back here in UNG, in SWN. Another trade popping up today in RRC, Range Resources, that's done okay breaking out today. But Range Resources, gotta look down at my notes here. May expiration, 30 calls out here, so kind of in the money. Not super exciting. But again, you see the intent as they're looking at natural gas and oil, generally speaking, to continue to move. We're probably a bit long in the tooth here as you look at UNG or Forward/NG rather. We're a bit long in the tooth. We did fade off our highs a little bit here, but this is the highest price we've seen in a while. Go back 20 years. We'll go a monthly basis. Last time we've been here is what? We'd have to go back to literally 2008 when natural gas prices spiked up to 14. And then we've been down this kind of like 2 to 5 range for a long time. Why? It was all about the fact that natural gas was oversupplied. You had a lot of energy companies that were producing natural gas and oil, a lot from the Permian Basin, led to an oversupply. We're not seeing the same levels of production. As a result, we are seeing natural gas prices going up, plus an increased demand, natural gas or liquid natural gas being supplied to Europe. As a result, we are going to pay higher prices. We're about to hit, obviously we're hitting spring right now, so maybe not need for heating your home per se, but we're going to hit summer and how much that might be, incorporated to produce electricity here in the United States. Anyway, so the energy markets right now continue to be strong. And in fact, BTU is one that we called out back here because of unusual option activity. I believe it was on the 5th, for example. But anyway, back here around the 5th, got a nice little run over the last few days. So all things energy have been doing very, very well of late. Even gold caught the bug today, right? Gold was up a bit, kind of faded back to finish towards the end of the day. But gold prices have been generally rising. We had some significant option activity back early in April, around the 4th or 5th right here. Sorry, about the 5th of April. It's had a nice run over the last couple of weeks. We talked about it. Blake and I talked about it, and I've talked about it a couple of times in our at the close session for our TheoTrade members on Wednesday. But again, there's limited upside as the dollar may begin to strengthen. Does the Fed policy really start to take hold? That's the big question. So as we look at the S&P, we're kind of lulled to sleep a little bit by the fact that the weaker dollar, rising gold prices, has held up the market a bit. The question is, do we start to see an oversold rally off of this point? Now, as you look into some names, there's an indication that that may be a possibility. For example, Bank of America announced today. What happened? They beat estimates. Is it pretty? Probably not. But the realities of Bank of America and banking in general is that there's an ebb and flow. We've ebbed, we've flowed, now we've got to ebb, whatever comes first there. We may look for a little bit of upside here. Couple of big trades today in BAC specifically after the announcement this morning before the market opened. One was on a 13 May expiration. So we look out here, we've got a 38 strike. It was one I kind of talked about earlier in my session. 14,900 contracts trade. Again, mostly bought at the 38 strike. You also got out here later in the day, the 41 calls kicking in for the same expiration, mostly bought as well. So again, what you're seeing right now is an indication. Could Bank of America push towards 41? This is a reasonable point, a nice engulfing pattern on the candles, and looking for a little bit of upside. So we kind of measured the retracement here as it hit the 50 and broke down. Let's measure the retracement going the other direction. So for example, I come down here, select the fib retracement tool, draw it out here. Look at 42. It's about a 61% retracement. This seems like a pretty reasonable spot for Bank of America to head in the coming days to a week or two. And again, it's a low risk, high reward point where you're close to support, where we're looking for upside here to $42. And again, we've got that option activity backing it up as well. On the technology front, so that was one of the better performers today. Not a great performer, but a better performer. NVIDIA as well. NVIDIA today at support. I've tested it once, twice, 3, 4 times over the last couple of months, and we're kind of holding up today. Not necessarily a big move, but there was a lot of trade today. And it's for this week's expiration. Sometimes this gets faded a little bit, but huge numbers out of the money here in NVIDIA on these options. You got the 220 here at 77,000 contracts traded today. Again, a ton of turnover. We'll see how much of that adds to the open interest. But the reality is there's a lot of interest and activity. And we start to break above 220, which was about today's high. We might see some gamma come in if we see a lot of that open interest carry over. So something to watch. If we take out today's high, we may see this run. Do we go back to 290? Maybe. Probably a long shot. Could we get to 240, 250? It's a very real possibility. And as you look at in here, you'll see the 220, you've got the 225, you've got the 230s, the 235s, and the 240s. And basically every break point, every $5 break point, you start to see the potential of pushing to that next level, $5 level here. So again, NVIDIA, watch it this week, see if we get any traction. It could be some decent upside here. So we've got kind of our oversold companies, BAC, NVDA. On the flip side, what do we got? We got AGNC. This is one that, again, talked about a lot. But again, more activity coming in today on AGNC. It's a bit of a roll here, but if we go to the trade tab, you look at the May expiration in April. So we look at the April, that's for this week. You'll see 20,000 contracts being closed out, by the way, right? We're closing out those puts. What's happening? And we can come down to time and sales. You can see the roll here, buying the 12 put, right? We're selling the 1250, buying the 12 for 20 May. So you look at it right there. So here we got a roll, just rolling, extending the time frame, the $12 strike price. And you look at $12 down here. Looks like we may be poised to break through the low of February 24th. And folks, this makes sense. Rising treasuries, you think about the mortgage market and the state of the mortgages that AG&C bought in the recent past here. They're diminishing in price, plus the potential borrowing costs of AG&C is going up as well. It's why we've been bearish on AG&C for a long time now, is because the numbers certainly point to the fact that it's going to be tough sledding for this company. They do have earnings coming up out here on May 3rd, for example. So again, you think about the haves and have-nots, right? Some stuff should go down. Another company like DraftKings, for example, DKNG. DraftKings today. So this is one we've had bearish activity on for a while now. We're at support. We have earnings coming up on the 6th of May. And today it was a roll. So there's that 22 April expiration in here, down at the 16 strike price. So notice right here, probably mostly closing that out. And again, we come down, we look at time and sales and say, okay, what happened here? So we're selling the 22.16 and buying the 29 April 13. You'll notice you're pulling some money out of that trade, but you're keeping something in there for that 29 April expiration. Looking at downside here, potentially to 13. You've got 15.50 in there. So what happened? It's a 15.50, 13 long put vertical. And again, this case costing, about what, 60, 50, probably about 60 cents. Okay. So decent reward to risk. Looking at downside here to 13, seems like that's a pretty reasonable probability that before the earnings, maybe we do see some selling and DraftKings continues to fall. Some others that are setting up bullishly, Caterpillar. I've said many, many times, focus on commodities, right? Agricultural commodities are one of them. Caterpillar, obviously, we had a pullback here. Had a nice breakout today, breaking out further, the highest price point we've had going back since June. And you notice we kind of floundered there a little bit at the high from January 18th. You might look to see some movement here. There is some earnings coming up on the 28th of April. But in Caterpillar, it was actually just a 22 April. So again, a lot of intraday stuff. Probably ended up getting faded a little bit. But again, you're seeing interest come in here at the 235 strike. We start to take that out. If we add to that open interest a lot today, start to take out 235, we could see a bigger move here. And the earnings coming up on the 28th could be a precipitating factor. But remember, that's for this week. Again, looking at, two different strikes, 235 and 232.50, both bought, looking for some near-term bullishness. So watch this tomorrow. If we see the option activity kick in again, you could see another major intraday swing in Caterpillar. See how it just takes off right off the bat, gives you an opportunity to fade it a couple of times throughout the course of the trading day. All right. Another one, this is on the bullish side, CSX. Again, it does have earnings. We did fade today. Earnings are on the 20th. But 10,000, we'll go to the August expiration here. 14,000 contracts at the $40 strike price. And again, as we look at CSX, we come down here to the time and sales. You look at it, what were they doing? Selling puts and buying calls. So as we look at this option activity for the 19 August expiration, selling puts and buying calls. And this is happening relatively close to the earnings, looking for some kind of a synthetic trade, just separating the strike prices there, looking for some upside here. And as you look at the cost of this trade going down here, you'll notice that the cost is about 5 cents. So minimal cost, expecting it to stay above 30, but the prospect, this thing may run and maybe running towards 40. So again, it's kind of a neutral premium trade, not really much of anything out of pocket. Just expecting that things kind of hang in there and likely continue to go up. CCJ, we talk about commodities and energy. CCJ, obviously, this is a uranium company, the largest in the world. There's a number of other ones, UEC, there's the ETF, URA. And what you're seeing is across the board, there's a bit of selling going on today. But beneath the surface, what you're seeing in CCJ, and this is why you probably want to see some confirmation, there are some calls being rolled down, meaning that they've moved out of the money a little bit. We're rolling down to a lower strike price. You'll see out here, 40s are being sold, being rolled down to the 32, and it's being done at a cost. So again, with these companies, yes, near-term selling, but look for these companies to pick back up and look for the rally. So you might look for the price to settle out, maybe a trade tomorrow through today's high, for example, have some sort of trigger level, or otherwise we may kind of pull back and find support. So point being is, don't take your eye off CCJ, for example. We may see it reset up as an opportunity here relatively soon. Now, we looked at CSX, which is a rail company, but then we've got J.B. Hunt. Now, J.B. Hunt announced earnings today, $2.29, beat estimates. Look, the price went nowhere. The big sell-off in transports that I talked about in At the Close a couple weeks ago, we're seeing that bear flag form right now. That bear flag means what? It's an indication we're expecting price to resume its downward trend, and we're looking for a breakout of this channel. Now, this area of support around 167 is relatively significant. If we take this out, however, we're probably going to see rolling back to about 155. In JBHT today, had a combo trade that was kind of put on today. So let's go to JBHT, look at the time and sales. You'll see what? A May 165 put, 155, and a 185 call. What's being done here? We're selling the 185 and buying the 165, 155 put spread. So again, more revenue neutral, right? Neutral kind of out of pocket, but looking for this thing maybe to retest our prior lows from back in June. So you may look for that breakout, but on that breakout, expect it to continue to go. So we have rail, some bullish expectations here heading into earnings, but then you've got some bearish expectations post-earnings for JBHT. Very kind of similar to what we saw in KNX, for example, Knight-Swift. Back here as we began to break, we had significant bearish activity here. Then we saw the breakout. Very similar here. Maybe some breakout further in KNX on its next earnings. But JBHT is already announced, and that's where the activity is today. And finally, we're going to look at TLT. Now, TLT, we talked about bonds. Bonds were down today. Yields are higher. We talked about AG&C and some of the pressure there. We looked at TNX. We looked at the yield curve a little bit. But today in TLT, it was a long put vertical. This was for a 29 April here. And again, you'll see a lot of activity. We're looking for stuff we're seeing more volume than open interest. But again, as you look down at time and sales, you'll see even more kind of brought together here, right? So 123, 120. You'll see back here 114, 120, 119, 5,000 contracts. So a couple of trades here. In this case, the 22 April, we're probably looking at this thing being rolled. Sorry, forgot the strike there. 22 April, 123. So we come up, 123s. Oh, where's that here? Find it. The call, sorry about that. The calls. Sorry, that's going to messed up there. So got to roll there. But you'll notice right here, for example, again, 120 put for the 22 April. So we're closing out the 120. And where are we rolling to? We're rolling to a 29 April, a 119, 114, right? So 29 April, 119, 114 is the spread there. Again, what's the prospects for TLT going to 114? Man, that seems crazy that that's a possibility given how much it's sold already. But given the climate, that's an out of the money spread where you're paying 25, buying 25 and selling 27. The volatility is moving in your favor. It's a relatively cheap spread. Again, relatively cheap with decent upside here. So again, oversold. If we look at TBT as well, there was some bullish activity in TBT today. If we look at the June expiration here, so again, anticipating the Fed gets a little frisky here, but the June 27 mostly being bought there. So again, there's the bearish sentiment in bonds is there. it's going to place additional pressure, continue to place pressure on certain parts of the market, but it will be born eventually on the market generally. We're just a little bit oversold, looking for a small bounce here maybe in some names that we kind of discussed here today. Other bullish activity in O, for example. Bearish activity in BEN, B-E-N. So we have a chance to go over everything. Some bearish activity in COMP, C-O-M-P. Bullish activity in ESSC. Anyway, some of these are kind of speculative, but real estate, O, as an example here. We're at the highs, 77.50 calls. Looking for maybe some breakout here. Very interesting. The REITs are doing as well as they are in the face of rising rates. Kind of true with regards to utilities as well. Eventually may break, but right now, at least for O, some expectation of some upside here in O today. All right, folks, we're out of time, but I hope you get a sense of the areas of strength and weakness that today's UOA story tells us. Anyway, we'll see you back next week on Monday's Theo Night video. Thank you.